Hello traders all around the universe. It is me once again, once in a while, trader coming to YouTube to analyze the market and hopefully try to help some of us like myself who are looking to analyze the market in the proper way and trade in the correct way. Here I am, Javan FX, right here on YouTube. Alright, so today what am I doing today? This is AUD CAD. The news came out today on AUD CAD, but unfortunately it wasn't good enough. So what are we going to do here right now? What do we want to do? The market is it's going down long term. The market is going to fall all the way down here when it's ready, but right now we can see the market is no doubt is trending to the downside. We have the trend line. Let's not forget to always use the trend line to confirm that the market here it's downtrend. Price is falling down, down, and down. Okay, and the short-term downtrend. Okay, this is the long-term view market structure, monthly band, resistance, support band. So long term the market is down based on the long-term view, but the short-term trend right here, as we can see right here too, is also down at this point in time, at this area. Okay, at this area the market is down, but right now, okay, so for me I'm going to say the market was down, not down. The market previously was down on the Monday time frame, and the trend line was broken. The market came down here to make a new low right here. So right now we have so since the market came down to make a new low right here, okay, so we're going to adjust our trend line exactly like this, because the trend line is confirming that this market is down, right? Yes. So right now, you know, this is what we can see. And last month the market made this, so me and hopefully some traders all around the universe are expecting price to drop down at this area, but to our greatest surprise the market is going up. Anyway, I still believe the market is still going to fall down. Why? Because we are in a downtrend, right? Yes. When this market made this higher high, broke this high, it would have been a different story if this low did not come. But since the market break this, break this high here and went all the way down to make a new low that is lower than this low, it simply means that we are lower lows, lower high, lower low. We are still in a downtrend, my friends. All right, guys. So the market is still going to drop down when it is ready. Yes, for me, my own humble opinion, the market is going to go down. But right now we are here. So I can clearly see the market came to test for me past resistance here. So this is a testing of a price resistance. You can see the market broke down. It broke that level of support previously because it was support here. We can see bullish pressures. All right, so it was a support, and the market resistant, and all the way to this level before we saw price coming back towards it. And now it is also resistant here, and it's also resisting gradually. All right, so very soon we should see price push all the way to the downside, hopefully. All right, and that's that on this guy right here. On the other hand, on the weekly time frame, last week we can clearly see a bearish candlestick pattern here, and the market tried to go up, rejected, and now it went up to retest that level, right? So for me, I'm expecting a drop to the downside. You can tell me that the market is in an uptrend, so we should be expecting more buys. to the upside. But believe me guys, I am going to disappoint you, not me. The market is going to disappoint you if you are focusing so much on buying this market. Okay, if you focus so much on buying this market, the market is going to disappoint you. Why? Because the monthly time frame controls price movement and price action on the weekly time frame. All right, does that make sense? Exactly, of sure it does make sense. So, and let's not forget all of those rejection, resistance right here. Okay, so the market is still going to fall down when it is ready. This bearish candlestick pattern for me was a signal to go down. This buy for me was a predicted buy. All right, it was a predicted buy. So because we have support here. All right guys, we have that support right there. So once the market refused to close body candle below that level, okay, once the market refused to close body candle below this level, like I'm talking about this area, if for example when this candle was selling, it came down to close body candle somewhere here, we would have seen a buy and a drop towards this level. All right, but that did not happen. Instead, the market stayed on top at this level last week. So that makes it a strong level of support and the market bought. But at the same time, we have a strong level of resistance too right here. Okay, so for me, we have to see how the market is going to play out, but I'm expecting a drop to the downside in my own humble opinion. All right, so in the nearest future, you want to be looking to sell this market to the downside. And if you are good, okay, if you're very good enough, you know how to use the indicators. Okay, if you are afraid to take a particular trade for yourself, all right, let me quickly check. Okay, I am going to just take this off and bring in my Ichimoku clouds. All right, so I'm going to be talking about the Ichimoku cloud with how you can properly take trades if you are afraid. With the help of the Ichimoku, you just have confidence to, you know, take your trades without being afraid. Lagging span, not this one. Okay, you. So you are going to be yellow, and you are going to be black. Yeah. Let me make it blue. Okay, black and blue. All right, so let me make it thicker. So we're going to be exploring these guys. All right, we're going to be exploring these guys, so stay tuned with me quickly. All right, 27, and make this guy 27 too. All right, and what else? These guys, it's gonna be this one and this one. All right, so we're going to be making use of the Ichimoku cloud on the smaller time frame. Okay, so when we are ready, we're going to make use of the Ichimoku cloud, and we're going to see how the Ichimoku cloud is going to show you guys how you can just enter the trade on the smaller time frame after. Okay, first of all, we must confirm what we want to do, what we want to trade on the higher time frame. Then we can go to the smaller time frame to pick the entry using the Ichimoku cloud without being afraid on if we should enter the market now, if we should stay out, if we should wait a little bit, you know, or we should sell the market right now. The Ichimoku cloud can be of a good help. I have tried it, I've checked it, and I can clearly see that it's really a good indicator to help you enter the market if in case you are afraid to enter a position that you saw that the market is going to go buy or sell, and you're wondering if you are thinking if you should buy, if you should sell, is it ready? The Ichimoku can be a good help, okay, to strengthen your morale, okay, to take the trade. All right, let's get into it continuously. This is the weekly. Okay, so right now the trend is up, and let's not forget that after a high, a low must come. So this is the higher high, this is the higher low, and this is the higher high right here, okay, based on short-term uptrend. All right, so the trend is up right now, and just like when the market was here, you know, finally the market made a low. All right, the market too right here, very soon it's also going to make a low. Now for me, I'm expecting the low to come towards somewhere here, and after that go back up, rejected at this level before going all the way to the downside. Why? Because the monthly time frame controls price action and price movement of the weekly, like I mentioned earlier. So now I can clearly see this, that this level I can't sell the market right now, but on the smaller time frame I can sell this market based on resistance, like the market is moving like a sideways. So if you already know this movement, you can clearly see this consolidation back in time. You should have been selling this market on the 15-minute chart, you know, all the way from here, as you can see. Okay, so when the market came all the way up to this level right here, this area here, okay, at this level, you should have been shorting this market and make that peep all the way to this area. And we're going all the way now to the back to the weekly time frame. Okay, and we are going to also look at something else, the market structure. So what is the market structure of the weekly time frame? Right here, the market structure of the weekly time frame, excuse me guys, okay, sorry about that. So the market structure on the weekly time frame is down, and the market structure controls the short-term trend, is stronger than the short-term trend. The short-term trend is up, the market structure is down. So what do I mean? So this is the market structure right now. Okay, this is the market structure. The market structure of the monthly and the weekly are the same. All right, so talking about from the monthly bands, resistance monthly band, we have this guy, extension, we have retracement, we have extension, we have retracement. So this area is supposed to be an extension leg all the way to the downside, hopefully. All right, so if we go all the way back to the, so I'm going to make it simple, it's going to go like this. So extension, so this is the lowest low, extension, we have higher highs, higher low, and higher high, retracement, extension, higher highs, higher low, retracement. So that's the retracement. So this is supposed to be an extension movement. All right, but for any reason now the market is here. All right, the market is playing around. So right now this is where we are. And if you go to the weekly time frame right here, we can clearly see that also we have, okay, we have this guy like this, and we can clearly see that it is also the same thing. All right, with the weekly time frame, the monthly market structure, the movements. Okay, so if we move all the way to let's see, back in time, yes, extension, retracement, extension, and retracement. So we are here and retracement, and now we are here also. So the monthly and the weekly market structure are in the same direction. So down, 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 which simply means sell, sell, sell. But the short-term trend on the weekly is up. At the moment the market break this high here, all right, the short-term trend was down previously. So once the market broke this lower high, it becomes higher high, higher low, higher high. That is an uptrend, all right, on the weekly. Now we're going to go all the way now to the daily. So what is the daily telling us? Okay, so this is the daily. So this is this yellow line represent the short-term uptrend of the weekly, right? So for the daily, the short-term uptrend of the daily starts from here, higher highs. Okay, so it's going to be higher. So let's go like this, higher highs, higher low. Okay, and higher high here, higher low here, and now we are here talking about higher highs and higher lows. So we are here right now. All right guys, So this is what we have right now on the daily. So the short-term trend is up. So after a high, a low should come. Now, if this is the daily higher high, this is a low right now. Now, is the market going to make a new high? We don't know. Okay, we don't know. So if we look at the market moving on this sideways move here, one resistance, support, resistance, I'm expecting a down movement to this level as a support. That's what I'm expecting to see in the upcoming days, like tomorrow on Friday. I'm expecting the market to go all the way to the downside. All right, now as you can see, the market structure on the daily time frame is up. Yes, it is up, because previously the market structure was down. Okay, it was down, and we have this retracement market structure low here. So I'm going to go by like this. Let's say from here we have extension, we have higher highs, higher lows, higher high, and extension. So once this market make a new high here, it broke this. Okay, it broke this this market structure low, retracement low right here, this black line. All right, so this retracement here, we can see once the market make this new high, it broke this down market structure retracement low here. Okay, exactly. So once that happened, it puts this market in an up market structure. So we have extension. Okay, we have lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows, and this is a retracement. Then we have another extension on the daily time frame. Yeah, so only the daily time frame market structure is against the weekly market structure and the daily market structure. Okay, well, let's not forget, higher time frames controls price action and price movement of the smaller time frame, which simply means the market structure, the up market structure of the weekly controls the market structure of the daily. All right, so that is the way we are going to be looking at the market. All right, so at this point in time, my own humble opinion, I'll be expecting that once the market makes the market structure make a market structure high here, just like, you know, this is market structure extension, and the market make a, this is a high, and it retraced market structure low, borderline, it makes a new high. Market structure high, we're expecting a market structure low, like a retracement, just like we have here. All right, guys, so that is what I'm expecting to see very soon. And believe me, guys, you can do this in all time frames. You can do this in all currency pairs. All right, all the current 28 currency pairs in the forex market, you can just do the same thing I'm doing right here. And believe me, you can analyze the market like a professional. All right, okay, it's not easy to start up with, but once you begin to get along with on a daily basis, weekly basis, monthly basis, you become so familiar with it, and you're just going to enjoy it, and you're just going to see the charts for the way it is. Okay, you're just going to see the market the way it is, and whatever the market tells you to do, you just trade accordingly what you are seeing on the chart. All right, guys, so as we can see right here, I'll be expecting more sales to the downside. Now, is it the right time for you and I to sell this market? Anyway, like I said, we would have sold this market like this bearish candle. We would have sold this bearish candle, okay, like on Monday. This is Monday, this is Tuesday, and this is Wednesday. Today is Tuesday right here in Brazil, but we would have sold this candle on the smaller time frame. Why? Because it is not a difficult thing to understand. Once the market came here, it sold. All of this area has been, there have been a resistant level at this level. So the market coming back to this area again shows that it is also a resistance. The market is going to sell. because it sold at this level back in time, it should also do the same thing at this area. Now, you're not just going to accept the fact that this market is supposed to sell because of just only this reason. Okay, no, you're going to also have this one. This is number one reason for you to sell, but one reason is not enough for you to sell the market at this, like, okay, once this candle close for the day on Monday. So I'm talking about this green candle here. Okay, it is not a reason for you to enter the market and start shorting the market only because you have this resistance here back in time. That is one reason, but one reason is not enough. So you need multiple reasons to short the market. Once this candle closes below this resistance area, if you want to short the market, once the market open for the day, you want to go short, you need other reasons. Okay, what are other reasons on the daily time frame you want to see? Don't forget, the market structure of the weekly is down, the market structure of the monthly is also down. Okay, now the short-term trend on the weekly is up. Okay, now not forget that 2 weeks ago the market made the bearish candlestick formation, okay, on the weekly time frame. So everything that comes here is a bearish level. Okay, it's a resistant level, it's a bearish level. So whenever the market comes here, you should expect a push to the downside. And this right now is a weekly candle. Okay, it's a weekly candle. So once the market came here this week, okay, this week the market began to drop to the downside. That is when this candle opened for new week. Okay, like this is 1 2 3, so this is 1 2 3 4 5, right? So last week the market bought all the way to this level and closed body candle here. So once the market is opening for the new week this week, you would have started selling this market, because you can clearly see it on the weekly that 2 weeks ago the market sold at this level, and last week it tries to go up here but rejected. Now that the market came all the way up here, you should also know that the fact that the market rejected at this level, there should also be a resistance level here, because the market has established a level of resistance. So that level of resistance is going to hold, because it is very strong level of resistance. And when we go back to the daily, we can clearly see that a multiple resistance happened at that level. Rejection, 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 and also a slight rejection here. The market refused to break to the upside. So you would have started selling the market once the market opened for the week since a Monday. Now we have one reason to sell the market on the daily, couple up together with this reason, okay, which we have right here on the daily. All of this is still one reason, okay, to short the market. And we also have another reason, okay, extension, retracement, extension. Okay, after a high, a retracement should come. That is another reason. Number two, we have two reasons, okay, all the way on the daily time frame. I'm talking about the reason why we should have sell this candle on the smaller time frame. So we have two reasons. Okay, now when we talk about short-term trend, okay, when we talk about short-term trend, the market is higher highs, higher lows, higher high, higher low. If the market makes a high, then it's going to make a low. That is another reason. So after a high, a low must come. So this was the high we have here back in time. Then on Monday, the candle came open for the week and went up, make a new high that is higher than this high, and started dropping to the downside. So once the market opened for the week on Monday, for the day, we would have spotted this. Where? We would have spotted this on the 1 hour chart right here. I can show it to you. We would have spotted that the market made a high. This was the high. this was the previous close. All right, so I'm going to change the colors for you to see. So this was this blue line was where the market closed and the market opened, and the market made a new high. So once the market made a new high that is higher than this high, all we just need to do is, we are planning to sell this market, we'll go to the 1 hour chart. And what do we see on the 1 hour chart? What do we see on the 1 hour chart? On the 1 hour chart, we saw that the market went up at this level, pushed up and make a high. And that is the high that we are seeing on the daily time frame. All right, the market made a high. Okay, this was the close and open. Okay, right here, this candle, where is it? This is the close and open of the candle here. All right, this candle here. So the market closed at this level, and when it opened, the market started buying all the way to this level and makes a new high. Okay, it makes a new high that was higher than this high right here. Okay, so once the market made this a new high, what happened, guys? What happened? Something very interesting happened. The market started selling. Sellers begin to push price. The bears begin to push price all the way back to this level, and the body candle closed right here. And what candle is this? What kind of? This is a bearish candle, maybe a shooting star candle, and this wick is a sign of a bearish pressure. Okay, it's a sign of a bearish pressure. And my friends, you and I would have started selling this market at this level. Okay, and we are going to put our stop loss right above this level, and we're just going to risk whatever you want to risk. As for me, I would have risked 1 for 2. Like, my stop loss is going to be just right here, and I'm going to risk 1 for 2 risk reward ratio. Okay, for example, on the 1 hour chart. And my friends, this is how the market went down and gives you profit. Okay, so please take your time to watch this video time and time and again, and know what I am talking about, and how you can, just practice this stuff I'm showing to you right now. Practice it on multiple time frames, on different currency pairs, and trade it on the demo before you go on a real life account. Okay, make sure that you trade it on a demo account. Make sure that you have more results for yourself. Prove to yourself that this style makes a lot of sense to you, and you can trade, going about using this style. All right, now this is just for the 1 hour chart, so I'm not talking about using it on the 1 hour chart. You can use it on the 1 hour chart also. Okay, like we can see here right now. And go to the 15-minute chart. Now, if we go to the 15-minute chart, and this happened, okay, back in time, this happened. This was a bearish candlestick formation. When the market came all the way here, this was a resistance level. Okay, so the market went up and break inside that level, try to make an attempt to go up here, rejected and closed bearish candle again, and finally the market dropped. All right, so how would you have used the Ichimoku cloud to take this trade? I haven't checked it with the Ichimoku cloud, but I'm just going to check it now for us to see. I didn't check yet, but I'm going to check and see how hopefully the Ichimoku cloud would have been helping tool for us to enter the trade without being afraid. Now let's see the Ichimoku cloud. It's a very short move. Okay, it is a very short move in my own humble opinion. So we would have started selling this market. 1 for 2 risk reward ratio wouldn't have worked, if you ask me, because if we sell the market without using the Ichimoku cloud here, okay, at this point in time, or we can actually decide to sell from here once the Ichimoku, once price close body candle below this conversion line of the Ichimoku cloud. I'm talking about that blue moving average. So once the market closed below it right here, okay, once the market closed below it right here, we would have started selling the market. Stop loss will go up right here, and we're going to risk 1 for 2, and we are going to win the trade. Okay, it is not a huge move, but this is one style we can use to trade the market. Now, another thing we can also do is we can re-enter the trade. Okay, we can re-enter new position at this level. Okay, once the market broke all the way to the downside, close body candle below the cloud, okay, right here, we would have taken new position. Stop loss goes right here, okay, and we are just going to monitor the trades. Okay, monitor the trade and see how it's going to go. Although the moment we enter the trade here, the market went up. If we are not afraid, we can only see that the market went to retest that breakout, because we have a support right here, and the market break to the downside, went to retest that area inside the cloud, okay, after the breakout from the cloud. Then now the market broke out again and start falling to the downside. And my friends, this is how you would have made a lot of pips from this AUD card back in time, just using this style that I'm showing to you guys right now, right here on YouTube. All right, so there are more styles I can show to you, or call it strategy, that I can show to you that you can use to make profit steady in the forex market. If you follow me right here on YouTube, I'm going to be sharing different styles, different strategy that you can use to make profit. Simple strategies that you can use to make profit day trading the market, the forex market, for yourself. All right, so if you like what you are watching right now and it makes sense to you, but because what you are seeing here right now, you have to prove to yourself. You have to allow these things make sense to you. You have to really practice these stuffs, okay? Practice with it before you make a decision to trade with it live. Make sure it makes sense to your inner self, because if it makes sense to you on the surface and it does not make sense to you on your inner self, you are not going to get it right. Okay, so that's why you want to allow it to make sense to you. So it means you have to trade it on a demo account, not once, not twice, not 3 times, not even 50 times, because 50 times is not enough for you to prove to yourself that this style of trading makes sense enough for you. So out of 100 trades that you're going to take using this particular style, okay, you have to do it the same way, like enter the market from the way I've explained in the chart. Enter the market the same way, exit the market. You can create a style of exiting the market for yourself. Okay, for me, I do risk reward ratio 1 for 2. That's what I do. Okay, so you do the same thing for yourself. Maybe this style is going to work for you, maybe this style is not going to work for you. Okay, because it is not every style or strategy people share on YouTube that can work for you. Okay, so that's why it's very important that you practice that strategy, you practice that style. Maybe it fits you, maybe it makes sense to you. Yes, it can make sense to you outwardly. Inwardly, does it make sense to you? If it does not make sense to you inwardly, it's not going to work for you. Okay, so you want to practice it on a demo account, see the result that you are going to get with time. Okay, so out of 100%, if you can able to prove to yourself that 60 times out of 100 trades, if you can win 60 trades out of 100 trades, okay, with this style, without you being emotional, believe me, you have found yourself a style that suits your personality. And believe me, automatically, like my mentor will always say, you become an instant millionaire. Yes, I can say this for a fact, because this is what I do. Okay, guys, so try this style. If you don't want to use the Ichimoku, it's not a problem. You can use the empty chart. But if you are being afraid then you can use the Ichimoku cloud, and you can decide how you want to go about using the Ichimoku to trade. So for example, like I said, once the market make a low, not a low precisely, sorry, once the market cross the conversion line, this blue line, okay, close body candle below it, okay, then you can start selling the market at that moment in time. And let's not forget that we did check the market all the way from the monthly, weekly, daily, 1 hour before we got to the 15-minute chart. So all of these analysis you must do before you take your trades. All right, you must do all this analysis to give you high probability of a winning setup. Okay, high probability of a winning setup. And there are some times when you can even do, analyze the market, and you can see a high winning setup, and you take the trade, and the market is still going to go against you. 3 times out of 10 it's going to happen, but 7 times out of 10, believe me, the market is going to go to your direction. And now let me make something clear right here. This is not meant for beginners like novice. What I'm sharing is meant to be for people who have a bit of some knowledge about the forex market. When I'm talking about